Welcome back. Well, we still have about 20 minutes for the markets to open, so more guests join us. SP Tulsian of sptulsian.com is with us now. Good morning, sir. Well, first up, this Boeing issue appears that it's going to hit SpiceJet much harder than was initially expected. Now, do you think Indigo becomes a bigger buy? How would you approach the entire news?
Lata, definitely the airline stocks are looking good ahead of the vacation season also, which are seen to be quite good business time for the airlines, April, May and June. And definitely when you have the about 40% of the jet aircraft already grounded, and SpiceJet is also seeing the about 10 or 12 aircraft getting grounded, Indigo definitely remains is seen to be quite a big beneficiary of this. But share having risen so much, from its low after the bad dull Q3 numbers or the dull Q2 numbers, it needs little caution. So maybe one can wait, because if the overall market remains sluggish for next 2-3 days, then probably even Indigo can be bought. But yes, the outlook remains positive on Indigo going forward.
Okay, Mr. Tulsian, good morning. Your thoughts on ICICI Bank? Yesterday it hit a fresh 52-week high, and there's been quite a bit of delivery buying over the last few days.
Anuj, that's right that the share has hit the high, but if you really take a call now, situation going forward, or maybe the data point which I've read yesterday, if you see the Bank Nifty constituents advanced declines of 5 to 7, and two stocks, that is HDFC Bank contributed 200 points to Bank Nifty gain, ICICI Bank contributed 175 points to Bank Nifty gains, and otherwise seven stocks were seen to be in weak zone. So yes, this is seen to be, maybe the bullishness will remain positive, will continue in the near term. But we are keeping cautious view that the ICICI Bank seen having peaked out in the near term. I am not taking a long-term view of maybe 3 to 6 months or so, but definitely it's seen to have peaked out in the near term. Maybe till this weekend, or maybe till, in the near term it may remain positive, but more upside is not seen. And we don't rule out the possibility of stocks seeing the profit booking as well in the next week by about 4 to 5%.
Okay, Mr. Tulsian, good morning. I also wanted to ask you about Tata Motors, because there's fresh news that the UK Parliament has rejected Theresa May's deal for the second time. Of course, we don't know if it's a no-deal scenario just yet, but it could be, a new deal, a delay, perhaps a new referendum. And 20% of JLR's volumes comes from the European Union region. Do you expect further pressure on the Tata Motors stock?
See, Sonia, this is just again maybe can be taken as a fresh negative for the Tata Motor, but I don't think that there was any positive news except for the technical maybe short selling recovery, and the share having recovered and again moved back to 185, 190. And we are not keeping positive, because the if you see the structural relief seen coming in for the company is not seen, because even if they are able to manage the geography, the Europe geography, the China is seen to be again a big setback for the company in terms of the vehicle sales. So I think overall the things are not seen to be comforting, and there is no point in taking a call. That too when the other alternative in the PV space, maybe like M&M and Maruti, are seen to be still looking quite attractive at the current level.
Okay, fair point, sir. I wanted to also know whether, what are you doing with all the entire auto complex? We've seen a goodish bit of run after the February numbers, which you pointed out were actually better than January. But has a catch-up happened, or are those stocks still buyable?
Lata, I think we have seen the frenzy, or in fact the upsurge in the two-wheelers is seen to be quite high. Whether you take Bajaj Auto, Eicher Motor, Hero Motor, in fact all the stocks have run quite a lot in this last maybe 2 weeks or so. And I think that we are, and in fact this is what I have sounded 3-4 days back also, that we are keeping cautious view on the two-wheeler stocks going forward, and maybe profit booking will be seen coming in. These stocks are also seen in an overbought zone, whether you talk Eicher Motor and Bajaj Auto, more especially these two stocks, where we are keeping more cautious view. But the passenger vehicle segments are really seen to be quite good, and the two stocks which I have said, maybe Mahindra and Maruti, and obviously Escorts is seen to be the prime pick by us, on which we have been giving buy call for the last two or 3 months. So yes, these three stocks are looking still good in the auto space: Maruti, M&M and Escorts.
What about Bharti Airtel, Mr. Tulsian? We've seen fresh buying in that as well for last 2 days. In fact, it's up 10% this month.
See, Anuj, actually, if you see when the announcement of 32,000 crore rights issue was made by the company, if you recall, and when I was asked that what is the view, I said that this is seen positive, but then thereafter the stock has corrected 6-7%, which had no reason to see that kind of move happening. But yes, the positive news of 32,000 crore rights issue and the Bharti Airtel is seen now pumping in money in the company, and that is why in fact they are looking to monetize their 32-33% stake in Bharti Infratel also. So all these data points are seen positive even for the Idea Vodafone and even for the Bharti Airtel also. But I think again both the stocks are seen having ran quite a lot in this last 2 or 3 or 4 days. And again, the caution is required on both the telecoms, Bharti Airtel as well as Vodafone Idea.
Okay, so I also wanted to ask you about DLF, because there's quite a big upgrade on DLF from CLSA this morning. They have a target price of 229, and they say that the rental business is all set to deliver double-digit compounding growth in the longer term. Would you be convinced about that argument, and your thoughts on DLF?
Sonia, definitely the commercial or the rental space is seen to be picking up, but I have my doubts that the northern region, the NCR, where the company has a very strong presence, will really see this kind of double-digit growth coming in. That's number one. The only positive is for the DLF, is the debt reduction. The company on a standalone becoming debt-free, and on a consolidated basis also their debts will get reduced to about 6,000-7,000 crore. But otherwise, I think amongst the real estate space you have, because the problem of the unsold inventory is seen looming quite high on the company, and you have not seen the revival in the houses sales, but definitely things are seen positive going ahead from 1st April when the GST will get reduced from 12% to 5% on the under construction, and for affordable from 8% to 1%. So yes, the things are seen positive, but we are not, DLF is not seen to be the prime pick amongst the real estate stocks which we will look to. Rather, we will be looking for the stocks like Indiabull Real Estate, or maybe Puravankara, who has a presence in affordable housing, or maybe Sobha, or maybe the stocks like Prestige Estates, who have again the rental space quite a lot on the lines of the Indiabull Real Estate, which we have been seeing. So these are the better picks available among the realty space over DLF.
All right. Mr. Tulsian, do stay on. We have lots more questions, but we need to put some derivative strategies as well on the table. Vinod Sharma of HDFC Securities is with us. Morning, Vinod. Thank you very much for joining us. So what are you trading today? Will it be the frontliners or will it be the mid-caps?
Yeah, good morning, Lata. And it will be the frontliners as well. And it's heartening to note that when the Nifty was 10,850, we had said that we'll cross 11,200. We've crossed that. Now, 11,350 is a logical resistance because it is a 76.4% retracement of the fall that we have seen from 11,760 to 10,004. So that is there. We believe that by 13th or 15th of April, the market would have made a new high. So there are other things which are now, the jigsaw puzzle is now falling into place. The FIs are now playing catch up. The amount of FI buying which has happened in the last 5 days is 10-11 days is almost highest in the five-year period. Also, whenever you have a 1% Nifty going up and subsequently also 1% goes up, these kind of things you're not seen for almost 2.5 years. So there is something big which is happening. So any profit booking that happens is an opportunity to buy. You need not sell. So with that, we see I'm buying the Nifty, let's say 11,400 call for the current month at around 85 rupees. I'm not even saying you buy at lower rate. You buy at 85 rupees or whatever it opens at. And I believe that with the stop loss of 50, you can possible to make 150 rupee to sell it at 150, which makes almost around 65 rupees for you. Yeah. The last Bank Nifty call that we had given, the returns were there, 74% target met. But if you are still holding, the returns are almost 420% plus. In a matter of week, this for the Bank Nifty, which will expire tomorrow. Now, coming to other stocks, I think the one stock you have to pick up, I think it is IndusInd Bank, which is playing catch up in the space. And I'm buying the 1600 call at around 25, stop loss at 18, target of around 40.
Okay, well, that sums up your list, or do you have a few more stocks?
I have two other stocks.
Okay, go ahead.
So one obviously is Reliance.
Okay.
Reliance will continue to do well. I am buying the 1340 call at 27, stop loss at 20, target around 40. And Sun Pharma is the one is my fourth stock, where I'm buying the 480 call at 10, stop loss at 7, and target around 15.
Okay, Vinod, we leave it at that. Thank you so much for joining us. So those are some F&O calls to work with. We'll take a short break on that note. But as we do that, we'll leave you with some thoughts from S. Krishna Kumar of Sundaram Mutual Fund, who believes that the downside for India is limited going forward, but he expects the market to remain in a range ahead of the elections. Hear him out, and we'll return with the pre-opening rates in just a bit.
Very low asset allocation towards small and mid caps in the last 12 months. People started to push, I think, to buy something into the mid and small caps to position themselves. So from a big position of no exposure, people are moving towards getting exposed in mid and small caps again from a smart investor perspective. So I think that's what was responsible for the severity of the rally. And the valuations being so comfortable, I think really meant that the downside was very limited. Even if you were to go wrong on the elections, your fallback was kind of well protected. I think over the last couple of months, while the Fed rate posture seemed to be helping the emerging markets, India was still in a bit of a kind of a range given the elections that are due in May. However, I think a lot changed with I think the Indo-Pak tensions, and there's been a fair amount of swing back towards the BJP in terms of the vote share expectations. If you look at the BSE 500 or BSE 100, except for a dozen or a little more number of stocks, which have actually been staying positive and have probably delivered a 30% kind of growth over the last 1 year, the rest of the market, broadly has been, in tatters, and many of them are down 30 to 50%. So this is, across sectors.